Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to analyze Li Auto. I will go over a summary of the company, its model, that one model that it currently has, financials, analyst projections, and give it my buy, hold, or sell recommendations. So let's get right into it. So Li Auto is a Chinese EV manufacturer. It has created a company around a single product called the Li One, which is an extended range electric SUV, as you can see here on this page. It's a pretty cool looking vehicle right here. It's designed with the Chinese family in mind. It's a roomy SUV, and it has a small combustible engine that you charge while you drive. Think of it like the US Prius in the United States. It lengthens Li One's range to 487 miles. This is a huge selling point because the Chinese market is just beginning to bring fast charging stations beyond tier 1 cities in China. Li Auto's focus on a single product within the e-SUV space that improves the efficiency of each research and development expenditure, improving efficiency and probability of successful second generation vehicle launches into the upcoming future. Therefore, reducing new product execution risk also decreases Li Auto's overall business risk, which improves the probability of positive shareholder returns. Now, Li One was released back in 2019 and has already become the best-selling e-SUV in China. Li Auto delivered 8,660 vehicles in the third quarter of 2020, which was a 31% increase over the quarter two of 2020. This growth continued throughout quarter four of 2020 with another round of record deliveries. The 14,464 reported blew away management's top-end expenditure of 12,000. So let's look at some technical analysis right here. And I'm going to bring up Webull, what the company is currently doing right now. So it is trading at $36.75 a share. It definitely took a dip from its all-time high of 37. So we're right around the all-time high right now. Now, some EVs in this segment are still in the proof of concept stage, but Li Auto is well beyond that at this stage with the initial extremely successful rollout of the Li One. The Li Auto is well positioned to be a lasting player in the EV sector. Li Auto's IPO was back in June. With the IPOs, there are kind of a share lockups in effect. And for this stock in particular, that's January 26, 2021. That is where shares will be authorized to be released to sell by some initial investors. This will cause some downside volatility between now and that date. So right now we're at January 13th. So we're looking at January 26th. We got another 13 days for that. So I do predict there's going to be some volatility. Therefore, the next month, aggressive volatility. So let's look at some of the fundamentals. Now Webull's earning per share, I don't know why Webull hasn't updated their 2020 numbers for their earnings per share, but it's actually decreased from 56 cents, negative 56 cents a share. It's had that incline. It's not positive yet. It's trading at negative 7 cents earnings per share, and it's projected. My projection is that it will cross over that $0 mark and be positive by third quarter of 2021. Now, with the income statement, basically in 2019, they've had they were losing money, and they don't for some reason Webull doesn't have the income for 2020, but it's definitely it's been decreasing, so it's on the positive return. The total revenues are definitely increasing year over year with significant numbers. And they have taken some liabilities on their balance sheet because every EV company out there has to do some liabilities and their cash flow. So now the cash flow and balance sheet would normally have me very concerned because they might have to issue debt securities to stay afloat. But with outstanding sales numbers, with increase in revenue and increase in margins, they're going to be they're going to be just fine. That being said, I am very bullish on the long position on Li Auto. Let's look at what the other analysts have said about Li Auto in particular. Now, its majority is a buy, and the price targets is high at 59, average of 34, and it's currently trading above the average. and whatnot. So that being said, being very bullish on this long position is very aggressive. And if you're squeamish about risk, I would stick with Neo and Tesla, but I would definitely put some money into Li Auto. And if you want to wait out the volatility, wait till around the end of January before you put money into Li Auto. But if you're aggressive like me, leave it for the long position for 2021. And now the risk in the EV space are diminishing over the long term as the EV space matures in China. So there you have it, folks. I'm a long position on Li Auto, so I want to thank you for watching this video, and stay tuned for my next stock videos coming up pretty soon. I'll be talking with you soon. Ciao.